So how do we check the solvency of a business firm? If the asset is more than the liability, then the firm is said to be solvent. Outstanding expenses is liability, then outstanding income is asset, prepaid expenses is asset, prepaid income is liability. So this is asset. Balance sheet is not an account, it is a statement. Why it is prepared? In order to know the financial position by taking all the assets and liabilities of the business. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the fourth session of your chapter 8, that is from part B, Financial Statements 1, and this is from your first PUC syllabus. So already we have discussed few of the concepts, so let us quickly recall what we have discussed in a previous session. So in a previous session I have covered this topic, so we have learned how to calculate cost of goods sold. So what is the formula to calculate cost of goods sold? Sales minus gross profit, or cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. Next we have learned about profit and loss account. This is one of the part of your income statement, that is your second part, that is profit and loss account, where we have learned about meaning of profit and loss account, need and importance of profit and loss account, format of profit and loss account, and we had solved 6 marks problems on profit and loss account. So what is the necessity to prepare profit and loss account? In order to know the net profit or net loss of the business organization. So these are the few concepts what we have discussed in a previous session. In today's session we shall continue with the next financial statement, that is balance sheet. So balance sheet is an important financial statement. So what are the financial statements we have to prepare? That is income statement. Under income statement we have trading profit and loss account, and the other one is this is balance sheet. Okay, so let us see what is this balance sheet. So remember, balance sheet is not an account, it is a statement. So after ascertaining the net profit or net loss of the business enterprise, that is by preparing your profit and loss account, we will come across net profit or net loss of the business enterprise. The businessman would also like to know the financial position of his business. So how can we ascertain the financial position? By preparing the balance sheet. How can we ascertain the financial performance? By preparing trading profit and loss account. Financial position can be ascertained by preparing balance sheet. For this purpose, a statement is prepared which contains assets, all the assets and liabilities of the business. So remember, balance sheet is not an account, it is a statement. The statement so prepared is called as balance sheet because it is a statement of balances of ledger accounts which are still open after the transfer of all the nominal accounts to the trading and profit and loss account. So why it is called as a balance sheet? Because we are balancing the ledger account balances even though after taking into consideration all the nominal expenses in your trading profit and loss account. So all the capital items that comes under balance sheet. Balances of these personal and real accounts are grouped as assets and liabilities. All the nominal expenses or nominal accounts comes under your trading profit and loss account, and other than that all the personal as well as real accounts comes under the balance sheet, that is all your assets and liabilities. Liabilities are shown on the left hand side of the balance sheet and assets on the right hand side. So how do you write or how do you draw the balance sheet? So in your left hand side it will be liabilities amount, and in the right side it is assets and amount. So that would be the format of balance sheet. Now let us see the definition of balance sheet in the words of Carlson. Business firm showing what is owned and what the proprietor is worth is called as balance sheet. So according to Carlson, he explains that a business firm showing what is owned and what the proprietor is worth. So it is called as, and that what is worth is called as what? Balance sheet. According to A. Palmer, the balance sheet is a statement of a particular date showing on one side traders' property and possessions and on the other side the liabilities. So what does the balance sheet contains? Balance sheet contains the total of assets of the firm and on the other side the total of liabilities of the firm. So both are clubbed together where the total of assets should be equal to total liabilities of the firm. That is called as what? Balance sheet. So hope you are clear about the definition of balance sheet. Now moving on to the need and importance of preparing balance sheet. So let us see why we have to prepare this balance sheet. Of course, the main objective of preparing balance sheet is to know the financial position. That is your total assets and total liabilities of the business. Now let us see what are the other need and importance of balance sheet. The purpose of preparing balance sheet are as follows. The first one is main purpose of preparing balance sheet is to ascertain the true financial position of the business at a particular point of time. Normally balance sheet is prepared at the end of the financial year. So why it is prepared? In order to know the true and fair financial position of the business. And the next one is it helps in ascertaining the nature and cost of various assets of the business, such as the amount of closing stock, amount owning from datas, amount of fictitious asset, etc. So in order to know individual value of a particular asset, so balance sheet is to be prepared. It helps in determining the nature and amount of the various liabilities also. So how we know each and every assets in detail, in the same way we will know about all the liabilities in detail. Next, it gives information about the exact amount of capital at the end of the year and if any addition or deduction which is made in the current year. So what is the capital of the firm, or whether any additional capital is introduced or any amount is withdrawn in the form of drawings. To ascertain that, we have to prepare the balance sheet. It helps in finding out whether the firm is solvent or not. So thereby, by preparing the balance sheet, we will come across the financial position, so that we will come to know whether the business is solvent or not. The firm is solvent if the assets exceeds the external liability. So how do we check the solvency of a business firm? If the asset is more than the liability, then the firm is said to be solvent. If the liability is more than your asset, then it is an insolvent business organization. Next, it helps in preparing the opening entries at the beginning of the next year. So in order to continue with the next year, so it acts as the opening entries. So the balance sheet of the previous year will be the opening entries for the next year. Okay, so these are the need and importance of balance sheet. Now next we shall move on to the preparation of balance sheet. So here also you can expect a 6 marks question from the balance sheet. So preparation of balance sheet. So prepare a balance sheet of Mr. Nitin as on 31st/3/2023. So preparing a balance sheet is very easy. Just you have to identify which are the assets and which are the liabilities here. By seeing the question itself, we shall continue with segregating them into assets and liabilities. The capital, so it comes under the liability side. Land and building is an asset. Furniture is an asset. Cash in hand is a current asset. Sundry creditors, it is a liability. Next, bank loan, it is a liability. Drawings, so drawings will be recorded in the liability side. Machinery, asset. Bills receivable, asset. Bank overdraft, liability. Closing stock, it is an asset. Net profit, so it will be recorded in the liability side. So this is how you have to identify. After solving 2 to 3 problems, you can easily identify which are the assets and which are the liabilities. Now we shall continue here. So write the name of the person, Mr. Nitin, and balance sheet as on 31st/3/2023. Okay, so we shall start with, now we have capital. So first we shall record all the assets first. So first we shall begin with the current assets. Yeah, cash in hand is a current asset. So cash in hand 5,000. Cash in hand 5,000. Next we have the other asset, that is current assets. Yeah, closing stock 11,000. Closing stock 11,000. Then yeah, we are done with the current assets. Now coming to the fixed asset. So we shall start with land and building 20,000. Land and building 20,000. Next, after that, we have furniture 10,000. Furniture 10,000. After that, we have, these are liabilities. Machinery 20,000. Machinery 20,000. Next, after machinery, we have bills receivable. So it is a current asset. So bills receivable. Bills receivable is 5,000. After bills receivable, closing stock is done. Now come to liabilities. So liability capital, we shall record it later because for the capital we have adjustment. So or else we shall leave some space here. So leaving space, capital. So we have net profit also, capital 50,000. You have to write in the inner column. Add net profit. So net profit they have given in the question. So net profit is, so here it is 5,000. So it will be 55,000. And whether we have drawings. So suppose there is drawings. Yes, we have drawings 10,000. So minus drawings. Minus drawings 10,000. So in the outer column it is 45,000. So this is how you have to show your capital. Capital, add profit minus drawings. So this is capital. Now let us write all other liabilities. So we have sundry creditors 10,000. So sundry creditors. Sundry creditors 10,000. Next we have bank loan 10,000. Bank loan 10,000. Next after that we have bank overdraft 6,000. Bank overdraft 6,000. After that, after bank overdraft, yes, we are done with this. Now let us see whether your balance sheet tallies. So let's total. So 20 plus 30, 30,000, 50,000, 50,000, 55,000, 60,000, 60,000 plus 11, 71,000 in the asset side. Coming to your liabilities, so here it is 45,000, 55,000, 55,000 plus 6,000, 55, 60, 61. Here 20,000, 40, 50, 50, 60, 70, 71. Yes, in the asset side it is 71,000. Now coming to your liabilities, so it is 45 plus 10, 55 plus 10, 65, 65,000 plus 6,000 it is 71,000. So both the sides are equal so that your balance sheet gets tallied. So the total of assets should be equal to total of liabilities. Now we shall continue with the next problem. From the following particulars, prepare a balance sheet as on 31st March 2022. So they have given us certain particulars. So let us segregate them into assets and liabilities. Now coming here, building is an asset, debtors is an asset, stock is an asset, cash is an asset, bank is an asset, capital is liability, creditors is liability, bills receivable is an asset, bills payable is liability, bank loan is liability, investment is an asset. Okay, so we are already done with the segregation. Now we shall write in our balance sheet. So we'll write the heading balance sheet as on or as at 31st/3/2022. So we shall start with all the assets first. First we shall record all the current assets. So debtors, stock. Debtors 20,000. And stock. So stock is 30,000. Next we have after debtor stock cash. Cash is 20,000. Cash 20,000. Next we have bank 30,000. So bank is 30,000. So it is a current asset. So bank 30,000. After bank, we have bills receivable. So bills receivable is 10,000. Bills receivable 10,000. After that, we have investment 40,000. This is non-current asset. Investment 40,000. Now building 1 lakh. Building 1 lakh. Next we have debtors done. So all the assets are done. Now coming to liabilities. So we shall start with the liability. So capital. So for the capital, whether we have net profit. So we don't have net profit. Okay. So we shall start with capital, that is 2 lakh. We shall write capital here. Capital 2 lakh. So no other adjustment. So normally for capital, what you will do? Add net profit minus drawings. But in this problem, they have not given. So write it directly, capital 2 lakh. Next we shall write creditors. So creditors is 20,000. Creditors 20,000. After creditors, we have bills payable 10,000. Bills payable 10,000. Then we have bank loan 20,000. Bank loan 20,000. So how many liabilities are there? 4 liabilities. So all the 4 liabilities are done. So the total is 2 lakh, 2 lakh 20, 2 lakh 50,000. Now coming to the asset side. So let us count all the assets here. So 1 lakh, 40, 50, 80,000, 80, 1 lakh 10, 1 lakh 40, 1 lakh 40. So here it is 50,000, 60, 70, 80, 80,000. So we have to count here, that is 20,000 plus 30,000 plus 20,000 plus 30,000. 1 lakh 50 plus 1 lakh. So it is total, it is 2 lakh 50,000. So both the sides are equal. So the total of assets is equal to total of liability and capital. Okay, so this is how you are going to prepare your balance sheet. Now moving on to the next problem also, this is also on balance sheet. Prepare, or from the following particulars, prepare balance sheet as on 31st March 2022. Now let us segregate them into assets and liabilities. So capital, it is a liability. Net profit, liability. Drawings. So for capital, add net profit minus drawings. Okay. Next is creditor, liability, bank overdraft, liability, outstanding salary, it is liability, cash in hand, asset, stock asset, debtors asset, investment asset, bills receivable asset, prepaid insurance. So outstanding expenses is liability, then outstanding income is asset, prepaid expenses is asset, prepaid income is liability. So this is asset. Okay, so we shall continue with, so first we shall record all the assets, or this time we shall record all the liabilities. Okay, so we shall start with capital. So capital is 1 lakh, right in the inner column, because we have net profit and drawings. So add net profit. Add net profit. So net profit is 40,000. So this will be 1 lakh 40,000 minus drawings. So drawings. So drawings is 20,000. So outer column 1 lakh 20,000. So hope you are clear. Next we shall record other liabilities. Creditors 25,000. Creditors 25,000. Then we have bank overdraft 10,000. It is also a liability. Bank overdraft 10,000. Next we have outstanding salary 5,000. Outstanding salary 5,000. So we are done with the liabilities. Now come to assets. Cash in hand 30,000. Cash in hand 30,000. Next, coming to the next one, stock 40,000, debtors 20,000. Stock 40,000 and debtors 20,000. Then we have investment 60,000, bills receivable 5,000. Investment 60,000, bills receivable 5,000. Bills receivable 5,000. Prepaid insurance 5,000. Prepaid insurance 5,000. Now let us add both the sides. I mean, how many assets are there? 6 assets. 1, 2, 3, 4, 5, 6, and liabilities is 1, 2, 3, 4, 5, 6 liabilities. Okay, so let us see whether we have recorded. Yes. Now we shall total 1,20,000, 1,30,000, 1,30,000, 1,40,000, 1,50,000 and 1,60,000. So once again we shall count 1,20,000. Here it is 30. So 1,50,000, 1,60,000. Now coming to the assets. So assets is 10,000, 70,000, 90,000, 1,30,000 plus 30, 1,60,000. So both the sides are equal. So your balance sheet is proper now. Assets is equal to liability plus capital. So the total of liability side should be equal to total of asset side. So we are done with the balance sheet. So hope you know balance sheet is not an account. It is a statement. What is prepared in order to know the financial position by taking all the assets and liabilities of the business. Now we shall continue with the next calculation of operating profit. So you can expect this question also, but if you see this chapter, more weightage that has to be given to calculation of trading account and calculation of cost of goods sold. Other than that, you have to know how to prepare your profit and loss account, balance sheet and operating profit. But in your question paper, most of the time they have asked calculation of cost of goods sold and calculation or preparation of trading account and calculate the gross profit. Now let us see this problem. What is this calculation of operating profit? From the following information, calculate gross profit first. So we have to calculate gross profit first and operating profit for the year ending 31st/3/2023. So you know how to calculate the gross profit. So we have to prepare a trading account, then calculate the gross profit. So we have opening stock, sales, purchases, direct expenses, operating expenses and closing stock. So in your trading account, how do you write in, what are the things you have to write in the debit side? To opening stock, to purchases, less returns, to direct expenses. And in the credit side, by sales, less returns and by closing stock. So opening stock has to be recorded in the debit side. Sales, we have to record in the credit side, purchases in the debit side, direct expenses in the debit side, operating expenses will not come under trading account. So closing stock we have to record in the credit side. So first we shall prepare our trading account and find out the gross profit. So we shall start trading account for the year ending 31st/3/2023. You know the format. Debit side it is expenses or losses amount, credit side revenue or gain amount. So we shall start with the debit side. So to opening stock. To opening stock. So opening stock is 1 lakh. Then to purchases. So we don't have purchase returns. So purchases is how much? 12 lakh. Then to direct expenses. So what are the direct expenses they have given? Yeah, they have given directly. Direct expenses 1,20,000. So to direct expenses. That is 1,20,000. Now coming to your credit side, we have sales, less returns and closing stock. So we shall start with sales 24 lakh. So by sales 24 lakh and we have by closing stock. So closing stock is 1,40,000. By closing stock 1,40,000. So these are the entries you have to record here. Opening stock, to purchases, to direct expenses. By sales, we don't have less sales written, so by closing stock. Now balance both the side. So if you add here, it is 25,40,000. 25,40,000, but if you see here, this is 12 lakh plus 1 lakh, 13 lakh plus 1,20,000. So 14,20,000. So 25,40,000 minus 25,40,000 minus 12 lakh minus 1,20,000 minus 1 lakh. So you will get 11,20,000. So 11,20,000 is gross profit. 11,20,000. So how do you write? To gross profit carried down, and this is balancing figure. So we got gross profit, total both the side is 25,40,000. So 24 lakh plus 1,40,000, that is 25,40,000. So hope you are clear about, we got the gross profit. So using this gross profit, we have to calculate what? We have to calculate operating profit. So there is a formula. So operating profit is equal to gross profit plus operating income minus operating expenses. Now using this gross profit, we shall calculate the operating profit is equal to, so how much is gross profit? Rupees 11,20,000 plus, if you see the problem, there is no operating income, but they have given operating expenses. So operating income is nil minus operating expenses. So operating expenses is 2,20,000. So rupees 2,20,000. So what would be the answer? 11,20,000. 11,20,000 minus 2,20,000 will be 9,20,000. So 11,20,000 minus 2,20,000, that is rupees 9 lakh. So this will be the operating profit. So hope you are clear about it. So first we have to prepare trading account and find out the gross profit. Then we have to find out operating profit by using gross profit. So the formula is operating profit is equal to gross profit plus operating income minus operating expenses. So here it is 11,20,000 minus 2,20,000. So we'll get 9 lakh as operating profit. So my dear students, hope you have understood this session. See you all in my next session with a new topic. Till then, take care. Thank you.